Good morning, everyone. How is everyone? Welcome, welcome, welcome to office hours. We have a very special office hours today. And let me get everyone in here. Everyone's joining late. So let me know where you guys are. I'm going to mute everyone because we don't want anyone. If you guys have questions, feel free to raise your hand or put them in the chat. All right. We have a good group today. So if you guys are new here, my name is Carly Grundmann and I do the Building an Empire group. And so what we do at Building an Empire is I help newbies get their first deals. I hope my sidekick Joseph and I, wave if you're here, Joseph. I saw your name in the waiting room. We help newbies get their first deal. So we have Deal Room where we pull lists and we help do that. And part of the free thing that we do, so that's a monthly subscription of $20. You just have to show up and call and we'll do everything for the rest. But we also do office hours. We've done office hours for about 3 years. And office hours is a good place where people can come and learn. And a lot of people will come into my DMs and be like, hey, can I pick your brain? And this happens a lot. And I'm so grateful for that. But I'm like, let's do this. So a lot of people can learn at the same time. So that's how office hours originated. And last office hours, we had some great questions. People come in and ask questions and we're like, what are you doing? And they're like, we're raising capital. And so we started asking questions and we're like, what is it? What's the exemption? All of this stuff. And they're like, I don't know. And we're like, how are they protect? We were asking all sorts of questions. And so Ryan McDermott, raise your hand, wave Ryan. I'm going to bring him up in a minute. You might see him, happened to be in here in the office hours, just hanging out. And I happen to know that Ryan is, I'll introduce him in just a second of his, I don't know his full thing. But he is licensed in this sort of stuff. This man knows what he is talking about. There is a lot of people that say they know what they're talking about that, like myself, I know enough to be dangerous, but this guy has credentials behind his name. So he started answering questions and like going into things. And I'm like, you guys, we should have a whole Zoom on this, on raising capital, because a lot of people out there, especially if you're in the Facebook groups, it's a little bit of a disaster. And I'm like, I'm not a profesh on this stuff, but I know that there's things people don't know what they don't know. So I asked Ryan, I'm like, Ryan, do you want to do us a solid and come in? And he said, absolutely. He works with Everbridge Capital. He's part of Everbridge Capital. And those guys, if you don't know them, you should know them. If you're in the Gator group, we've got Darren is part of Everbridge Capital. He does the corporate underwriting. There's Russell. I'm going to bring them all up in just a second. And so they know their stuff. They are doing this day in and day out. They do business lending, funding. We're going to bring them up in just a second. So please welcome them for me, you guys. I'm going to bring up everybody right now. And while you guys are in here, so I'm going to spotlight myself. I'm going to look for Ryan. All right. Ryan. Add spotlight. I'm going to make you a co-host. I'm going to make all of you guys a co-host so you guys can mute and unmute yourselves. Ryan, welcome. I'm going to bring up the rest of the team, but while I'm doing that, introduce yourself. I'm going to have you guys all introduce yourselves. Let us know who you are. Tell us about these credentials that you have that I don't know a lot about. So I think you're the best person to talk about them.
Thank you, Carly.
Yes.
So as Carly mentioned, my name is Ryan McDermott. I'm a founding member of the Everbridge Group, managing partner as well. We are, best way to describe us is full service financial services company. We do M&A advisory. Darren leads a lot of those initiatives. We also do capital raising for other operators, right? We're licensed to do that as well. We also have structured lending products that we issue to a lot of our operators and borrowers. And corporate advisory also. So there's ongoing corporate elements, a business owner would contract us so we can go on ongoing corporate advisory or strategic advisory also. So a full suite of financial services. And as Carly mentioned, we do hold certain licensures in order to execute on some of these type of transactions, right? So in order for myself or one of my team members to raise capital for another person's offering, there needs to be certain licenses and registrations in place. So we pursued the necessary licenses in order to be able to execute in a compliant fashion.
Love it. So in other words, TLDR, they know their shit. They know what they're doing. We also have Darren Yee up here. Darren, welcome, welcome, welcome. Tell us about yourself. Who are you? If people aren't in Gator and they haven't been to some of your fabulous Zooms, tell us all about you and Everbridge.
Yeah. Well, first, I want to just thank Carly for having us and then everyone who's here today to kind of really just learn about capital formation. It is probably in our sphere in community, it's the last thing we really talk about. And so for you guys to be here to try to educate yourself and know and understand how to really truly do capital formation, it's really important. So I'm just appreciative that you guys are all here trying to learn about how can I do this with compliancy, legally, the right way to do it. Um, Most of you guys probably know I coach or host Zooms, I should say, in all of the communities, whether that's sub two, Gator, zero down. So most of you guys know me. Of course, my counterpart Judah, we're usually the face of the Everbridge group, right? And we're really just here to really help you guys and serve you guys in a way where we can, one, do the underwriting process, right? Whether it's a single family residence, it's a mixed use, it's a commercial property. Businesses is really our specialty, along with like mobile home, RV parks, which I know a lot of you guys are all exploring. And so I kind of work on the side of the underwriting, which I most typically call the risk mitigation side
Yeah.
of the opportunity. And then, if there's an opportunity ever for us to place the debt, whether we're using SBA or other commercial financing, or even helping with potentially even the equity part of it, we can kind of help that and we kind of move it through different parts of Everbridge and where at the end of the day, you need all of your financial services to land. And so, that being said, I'm a super analytical guy. Most people, at least in Zero Down, have named me the Dream Killer.
That's good.
So,
It is a good thing.
Which is a moniker he stole from our other business partner, who's the real dream killer. So believe it or not, anyone who calls Darren's a dream killer, wait till you meet Russell.
Russell.
But more than
We gotta
anything,
bring
like
Russell.
I want to just really help you guys get into deals that are good and stuff, and and that what makes sense and really helps protect you as an individual, but also protect your family, your friends, anyone involved that might be a partner. Looking at from a different lens than I'm the sponsor or I'm gonna buy the asset, whatever that might look like. Take it from a different lens of, hey, I'm a third party individual really just looking at all the elements of this deal, whether the quantitative or qualitative aspects, and giving you a perspective on that side. So
You want a deal killer in here. Have any of you guys ever done a deal? And I've heard this over and over again. They're like, I shouldn't have forced this deal. I shouldn't have forced this deal. I shouldn't have made it go. It was too skinny. It was this, it was that. Hindsight's always 2020. You want a deal killer in here because they're the source of reality. You don't want too much positivity and living in dreamland. So we love a good deal killer. And it just so happens that we were also talking, everyone knows about what happened to Brandon Turner. And I want to kind of give the floor to these guys. But what I do want to call out is Brandon Turner. These guys are going to talk about what is a security, what makes something a security. Brandon Turner did everything right. And he lost money. And that happens. That comes with it. But I see, and I'm sure Darren and Ryan see this a lot in these Facebook groups, especially, people aren't doing things right. They don't understand what they're doing as a security. They don't understand that the rules that have to go along with that, which Darren and Ryan are going to talk about. And what that does is that opens up themselves up to a lot of liability because Brandon likely did everything right. He's probably protected. People can't really go after him in a lawsuit, I am assuming. But if I just pooled money together and was like, hey, Darren, you got 100 grand. Hey, Pansy's in here. She's got 100 grand. I got this really cool thing. Hype. You want to throw your money together? They did. I lose the money and I don't go around the right processes. Then I'm opening myself up to a world of poop. So I'm going to give it to you guys. If you guys don't mind talking, I think a lot of people, if you don't mind kicking it off with starting off, is what's the difference between private money, like hard money and private money, and raising capital with a lot of money. I think a lot of people, what I see a lot is people raising capital like they would private money. If we could talk about that, what makes something a security? What's the difference? I'm going to give you guys the floor. Ask questions, you guys in the chat. And thank you.
Absolutely. Absolutely. So I guess we could start with, and you're 100% right, Carl. There's a lot of, PML and raising capital are somewhat used interchangeably in a lot of the circles we're in, right? So PML typically, right, a private money lender is somebody who's extending credit to a borrower, right? So let me give you an example. Darren wants to go do a fix and flip, and he's looking to leverage debt, right? And he goes to Carly and he says, hey, Carly, I want 100 grand to go do this particular strategy. And Carly lends it to him as a lender. Okay. In that particular instance, you're not dealing with securities. Carly is a lender, like Bank of America is a lender, and Darren is a borrower, right? Most likely Carly has a promissory note or a deed of trust, or right, whatever the collateral security elements are, right? That is not necessarily raising or pooling capital, especially when it's one lender, one borrower, right? So when you see, posts and people saying, hey, I need, a loan or PML for X, that is not a security. Now, that's not to say that debt as a product cannot be a security, but I feel like that's what we see a lot. And that is not particularly a security. That's a lender and a borrower. That's not necessarily capital raising. Okay. So is everyone following me thus far, right? What we see PML, that's not capital raising. That's borrowing and lending, extending credit to somebody who's going, okay, awesome. Awesome. Collateral, deed and trust, right? Exactly. There you go. There's exactly, Carly. Okay. Now capital raising, right, is obtaining effectively capital, pooling capital, okay, through passive investors. And that can look like a lot of things, right? That could be memberships in an LLC. That could be limited partnerships, right? That could be a syndication on a real estate deal, right? And that is when investors are pooled, right? And it's a passive element. I'm putting 100 grand into Carly's multifamily project. That resembles a security more, right? And that can lead us directly into what Carly mentioned, what actually defines a security. Okay. So this is in my opinion, an important component, right? That it should run through everybody's brain the second you have a deal and you're looking to raise money. Okay. And what defines a security was actually derived from case law years ago, Howey versus somebody, and they have coined it the Howey Test. Okay. And there's 4 prongs within the Howey Test. Okay. And if all 4 prongs are present, you now have a security on your hands. It's not a PML. It is now an investment contract, and you have to take appropriate precautions. The Howey Test, exactly. So prong 1, it's an investment of money, right? Someone is investing money into something. Prong 2, it's a common enterprise, right? All the investors are investing in the same common enterprise. Prong 3, expectation of profits, right? Everybody's expecting a profit when you make that initial allocation, right? And prong 4, here's in my opinion, one of the most important parts. It's derived from the efforts of other people, right? So if I'm investing 100 grand into Carly's project and Carly is doing all the heavy lifting and Carly is the operator, right? That hits that 4th prong, no question. Okay. If I'm just participating as a passive investor looking for my IRR or looking for my dividends or looking for some type of return or, large exit, I am now a passive investor. And that success is predicated off Carly's group efforts, right? Or organization, however you want to put it. So if those 4 prongs are present, you now have a security on your hands. Okay. Any questions thus far about the difference between like private money, right? Just operator lending to a borrower, and or potentially what a security looks like with the pooling of capital and how you proceed. Perfect. And anyone feel free to stop me. And Carly, call me out.
Yeah. Jonathan, you got your hand raised. Put your questions in the chat, you guys. We'll do questions at the end just for the stuff of time. And Ryan can read them in the side chat and answer those. Thank you.
Perfect. Darren, anything I've missed on the securities?
No, I think again, I always want to make that super clear, right? And when we're talking securities, right? There's always, when you're raising capital, we'll just kind of call it raising capital. There's two kind of categories we're looking at. There's debt and equity, right? Debt may or may not be a security. If it is all four of these, you probably have debt as a security. But equity, 99.99% is always the security. Like without doing a Howey test.
Right.
Like with no Howey test, if you're selling equity or anything of that nature, 99.99999% of the time, you've got a security. It's almost impossible not to sell equity and make it not a security. Just full transparency.
Exactly. So great question. And Russell hopped all over it. So D asked, is there a minimum number of investors that qualify as security? It could be one.
Yep.
Could be one, right? Those four prongs are the defining factors. Could be one person. It could be, okay, same scenario. Darren and Carly are doing a project. And Darren says, hey, Carly, this is my type of project. But the way he's presenting it, it now resembles security. And instead of borrowing, he's hypothetically selling limited partnerships or he's selling memberships in an LLC. And Carly's now approaching it from that perspective. Yeah, that's absolute security. Carly's potentially a limited partner. Darren's a general partner. Still same registration and or exemptions apply. So great question. And let's get Russell up here too.
Okay. Russell, you turn on your camera. It won't let me bring you up unless you turn your camera on.
Everyone brace themselves.
No judgment. So it won't let me bring you up until I'll unmute you in the meantime. But will you talk real quick? What's a GP or general partner? What's a LP and limited partner? Just real quick while we bring him up here.
Sure. Simplest form, limited partner is a passive investor, right? A limited partnership would qualify as a security. I'm investing as a limited partner. I'm limited in liability. Okay. I can only lose what I put in. Okay. That's where the limited partnership turns from. I'm limited liability. I can lose what I put in. A general partner is somebody who runs it, who somebody manages it, but they're not limited in liability. Okay. If hypothetically the company gets sued or the project goes south, they carry all of the liability, right? So it's a natural trade-off. Typically, the limited partners are the investors and the general partners are the operators. And the liability is the trade-off.
We got him up here. Russell.
There he is.
There we go.
Feel free to mute feel free to add into it too.
Yeah, I was just going to add in, I had to walk to where the internet was strong enough, where the Starlink reaches. But yeah, kind of to add to what's been said, and I'd like to touch on when you're soliciting for a lender, so your PMLs.
Good point.
You can turn your journey into finding a PML into a security solicitation on accident, right? And that happens when you start posting in public places out on the internet. To, like, if you text your buddy and say, hey, looking for a loan for this project, are you interested? You're probably fine. If you're posting openly on the internet in a mass solicitation framework, you're most likely turning something that doesn't need to be a security into a security solicitation. Obviously, you haven't sold the security at that point. As soon as money change hands, you've now sold a security without registration or proper exemptions. But even soliciting a security is no good. You can get in trouble just for the solicitation of an unregistered security, or you haven't filed an exemption to do so. So that's a part where things that shouldn't be a security, that aren't securities, that don't need to be securities, you can turn them into a security by mishandling them.
Yep.
So if I go on the internet and I say, I need somebody to give me a promissory note, and I promise I'll pay this much back, and these are the terms, and this is the deal, and reach out to me, that's pretty close to soliciting a security, even though it shouldn't be. If you say, looking for some lenders for some projects, anybody know some people, that's probably a smarter post. I still wouldn't do that myself, but it's a much smarter post than, here's my terms, here's my investment, here's my thing, here's what you'll get back. Give me money. That's where it gets sketchy.
Yeah, great point. Mm-hmm. So you could turn something that's inherently not a security, right? Like a simple PML borrower transaction, and by way of solicitation or marketing, make it a security, right? And as we move on to we could touch on exemptions, Carly, you guys will see that solicitation and marketing has a lot to do with the restrictions around exemptions, right? The trade-off for some of the things you can and cannot do.
So now that we've identified that, yes, we have a security, let's talk about what that means and where exemptions come in. I love that.
Right. All right. So you got a deal, and then you go, holy cow, I got a security on my hands. Whatever I'm trying to accomplish, I now have a security, right? What do? Got two choices realistically. You can register with the SEC, which is a very long, drawn out, potentially cumbersome and expensive process, right? It's effectively an IPO, right? When companies IPO, they register through the SEC and those securities become registered, right? Or you could seek safe harbor, and Russell, you could jump into the explanation of safe harbor because he doesn't like when I say safe harbor, but seek safe harbor.
It means you're compliant and following the rules. That's it.
There you go. There you go. So instead of registration, which could cost you potentially $1 million, right, for your little multifamily deal, whatever it is, you seek safe harbor in what's called finding an exemption. Okay. And certain exemptions in the private markets come with certain rules, right? You cannot just blatantly, depending on the exemption you pick and you ultimately land on, you have to follow a certain set of instructions based on those exemptions. Okay. So ideally, two choices: full registration or find an exemption to work under. Any questions thus far? Got a deal? You've identified whether it's a security or not. It is. Two paths you can go. Perfect. Perfect. Okay. So maybe let's touch upon some of the exemptions, because these are the most applicable to us, right? We're private market operators. We now have a security. Let's speak on some of the exemptions that are applicable and the things that come with them. Okay. Hold on. Tracy's saying, I'm still confused on a security.
So is the government.
That's also a very good point. That is a very good point.
Trying to figure that out all the time.
That is a very good point. They are consistently trying to figure out what qualifies as a security or not. But maybe, Carly, if it's all right, Tracy, if you could real quick maybe just come up and just say where your confusion lies, maybe we can try to help.
Here, I'll bring Tracy up. Tracy. Tia. All right. I'm going to ask you to unmute, Tracy. Thanks for asking this question. I love it. Hi.
Thank you. Yes. I do get confused because the 4 prongs that you talked about, if you answer yes to the 4 prongs, it's more than likely a security, which I'm assuming a security just means that there's particular rules and guidelines that you must follow from the government so you don't get some kind of fine, right? Versus just an investment.
Pretty much nailed it.
Okay. So the 4 prongs, like if like you said, like let's say I do a fix and flip and I ask Carly, for money and she's the PML, that still kind of answers yes to all 4 of those questions, does it not?
Well, again, if it's strictly lending, and Russell could jump in here because this is his absolute area of expertise. If it's strictly lending, the security lies in the collateral of the asset. So it's a hair different. And Russell, if you want to touch upon that, because that's a good point on Tracy, right? A PML can kind of also resemble a security. Okay. So go ahead, Russell.
Yeah. And I'll preface with, if it is a security, it doesn't necessarily mean if something falls out of service.
I think you're back.
You guys hear me?
Yeah.
All right. Okay. Sorry. So the PML deal can. All right. Let me walk around again.
Here, let me see.
You were good. You were good. You were good.
You were fine.
Okay.
Yeah. I'm going to try to turn off your video because if it starts to get choppy, because sometimes that can help.
Yeah, that's usually why I have camera off, is I'm in rural Idaho. But
I love it.
Yeah, so the PML deal, is going to largely come down to how you sourced each other. The borrower sourced the lender. So PMLs can go out there seeking for deals, right? When you're a lender, deal flow is usually the most difficult part of the business, right? Finding enough deals that are good to put capital into. You can do that all day as a lender as long as you meet local jurisdictional law, right? Some states you got to be registered, et cetera, et cetera. But for a borrower to go start soliciting to take money from somebody else, that's where it gets tricky. So if you're a borrower and you need money from a PML, if you're reaching out to somebody that you know is a PML, that's their normal course of business, they're seeking deals and you're finding them that way, that's usually fine. Again, this isn't legal advice, but that's usually fine. But if you're out there saying, I have this deal, it's going to give you this return, you're the lender on it, and you're dictating as the borrower all the terms and making that offer to PMLs, that's where you start turning it into security because you're the one driving the boat, right? When you go to the bank, they tell you what the terms are and they are soliciting you to come in their door. When you're the borrower in this case and you're out there trying to solicit money from somebody else as an investment, that's where it gets tricky because if you're soliciting, that's usually where you get jammed up. You're out there asking somebody to give you money because debt can be a security. I don't know if that helps a ton because it's really, go ahead.
So the people that like are capital raising and do pitch decks, like, is that not legal?
So you can,
sorry, Russell.
Yeah, you can talk about a deal that you're working on that you want to do. Like you can tell people your plans, right? But when you start soliciting to nail it of your legal paperwork and your exemptions claimed and everything on point before any binding agreements take place, before any obligation is created and money trades hands. But you can talk about your plans. You could be like, I want to do this and I'm going to try to underwrite and find deals that can handle this type of return. Like you could talk about plans and ideas all you want. When it becomes real and you start talking about locking things down, that's where it can start turning into regulated territory.
Can I ask a question that might help clear up like the difference between the PML and the security? So correct me if I am wrong, guys. With the PML, if I were to lend you money, Tracy, I'd be like, here's $100 grand. I'm going to create a note and I'm going to be like, I'm going to be a lien holder on your property. I'm saying, okay, if Tracy gets kidnapped by aliens and doesn't get my money back, I get to have her house. I can foreclose on that house, sell it and recoup my money. So that's a good, that's how I kind of look at it. It's one person, they can put a note or they can put, a lien holding position on it. Now, if you're like, hey, Carly, and the entire group, I have a multifamily property that I'm raising for, and you raise it with like 50 people, you can't be like, okay, well, Carly's position 1 for this much and Ryan's position 2. I think that's also a kind of a good way to think about how the money is secured. So I am securing on a lien position on your fix and flip. And let's say me and you and Everbridge Capital, let's say Ryan throws in money, Darren throws in money, Russell throws in money, and I throw in money. We create one LLC and put the money in the LLC, and then the LLC has the lien position. Is that, correct me if I'm wrong, you can do that, is still private money?
Say that last part one more time.
You and I, all of us create an LLC, and like Ryan, you put the money in, I put the money, everybody puts money in. Our LLC is the lien holding position. That's still considered private money, correct?
That initial LLC, go ahead, Russell, but that initial LLC configuration kind of sounds like, and I don't want to take us down a rabbit hole here because we're on a good path. It sounds like an investment club between the 4 of us.
It does. You're right. You're right.
And Ray, if you want to add something to that, Russell.
Let me put that back in my mouth. We'll get to the, I think we'll get to the investment club after we talk about
Dang
security.
it, Carly, I was following you.
Yeah. So,
I was like,
We
oh
have
no,
the
Carly went down the
professionals
investment club route.
so And I may not fully understand the definition of PML as most of the people here understand it. To me, a dollar coming from somewhere, no matter what you call them, has the same rule.
Yeah.
For the most part. Right? So the majority of securities out there they're considered a private security. It is their individual person, or it's from a small business owned by somebody. I'm both private lenders, and that's usually somebody that has a side hustle for lending, right? It's kind of my understanding. It still has all the same rules, no matter what the collateral is. When you talk
Russell, we're losing you again.
security, walk into Wells Fargo and ask a mortgage on your house. So, dang it.
We're
I
losing
gotta
you,
move to
Russ.
California or somewhere that phone service.
I mean, Tracy, the best way we could surmise is a lot of things Russell touched on already, right? A lot of it has to do with the solicitation and advertisement of the position. Okay. If I'm sending Carly a text and like, hey, Carly, I know you're a lender looking to knock out a fix and flip. What do you got for me? And she's like, oh, I could probably do a 6-month term at, 12%. That's probably more of a direct borrower PML type of relationship. But if you are blasting online, and especially if you are potentially pooling a lot of lenders, right? All right, all lenders into one and everyone gets 12%, we're all first position. Again, and you're not only if you're advertising and soliciting that, even the formation of that can put you in securities territory, right? So, and as we kind of walk through the exemptions, you'll see what some of the advertising and the soliciting elements have to do with all of this. But and I say all that to say this: if you're ever going to do a project and you are unsure, do the Howey test. But then, Carly, what do you think I'm going to say next after that? Consult with a securities attorney.
Oh.
Always,
Yeah.
always. If you're ever thinking about raising capital or pooling, or yeah, oh, you mean you can engage us as advisors too, but we even want attorneys involved.
Yes, always. We love a good SEC, Security and Exchange
Or
Commission attorneys.
Yep.
Yeah.
So, yeah,
I've walked into an attorney's office before, thrown what I want to do on their table and say, make sure this is not a security.
right.
Or I say, we're going to call this a security, write this up, right? And that way, if you call it a security, you have freedom
Yeah, protect it
and
now.
you can run, right? There are rules, but you have way more freedom than soliciting something that you're not treating as a security. Because look, banks are soliciting you, PMLs are soliciting you, that's fine. You go start soliciting them. Like if you go walk into Wells Fargo and say, I got this business opportunity, I want you to be my partner, and here's the terms, you're technically soliciting a security, right? If you go in there and say, I want to do this project, what products do you have for me to get it funded? It's the other way around, basically, right? They're soliciting you. So that's kind of where you get jammed up. Who's driving the boat on all of the things, right?
Right. So really, it probably makes the most sense, which I planned on doing anyways, is to network with PMLs to find out what their lend box is. And then when I come across a deal, then ask for the money.
Yep. Simple text,
Okay.
email. Hey, it's got something down the line. What do you got for me? I know you said previous your terms are this, right? Then you eliminate the whole general solicitation. Hey, you got this multifamily contract and Facebook group and everything. And then it's now you're protected. But always, run everything by a securities attorney. And if you can, like Russell said, go in there with intention, right? A few years ago, Everbridge was working on a debt product. And we went in and we said, just make this a security. Because we wanted to be able to, as Russell put, run free, right? We didn't want to have to be worried about, okay, did I say something or do that, right? So if there's ever any doubt, my estimation, just go the securities route. Do it the right way. So you're building track record on top of that too, right?
Thank you guys so much for doing this, because I've been frozen in place because I'm so risk averse that
That's great.
I just can't move. I'm afraid I'm going to do something illegal.
And it's good to know, to educate yourself. Check yourself before you wreck yourself. Like Ice Cube says, it's a good way to think of it if you're into the 890s rap. But it's good to take risks. Just take calculated risks. Know where you're falling. Be like, okay, is this a security? Okay, what do I take it down this path? Do I take it down this path? So thank you for asking that question, Tracy.
Yes. Thank
I
you.
really wanted to cover the difference between PML and security because I think that needed a big
Yeah.
I'm glad that we covered a lot on that.
Yes.
And
Thank
also,
you so
a
much.
lot of times when it's straight PML, and then we can move on to the exemptions, and you're lending debt, that's an obligation, right? If I'm raising equity as a security and Carly comes into my equity project, my multifamily project, Darren comes in as a limited partner into these projects, I don't have an obligation to pay them back. They're my partners, right? In a limited capacity, they're my partners, right? So a lot of it also has to do with, the needs of the project, right? If somebody is lending me money in a first position lien, I have to pay them. I have to pay them. So there's that as well. So let me move on to the exemptions, right? So we've established that registration or an exemption. So let me start with the most common one that we're probably going to see in these lower middle market opportunities, right? So it's something called Regulation D. You can put a 1, raise your hand if anybody's heard of Reg D before. This is probably the most common one we're going to use. Awesome. Awesome, right? So under Reg D, there's really two that we hear about the most, and there's one other kind of side one. So maybe I'll start with that because it's less heard of. So there's Reg D Rule 504 to start with, okay? And under 504, you can raise $10 million over the course of 12 months, okay? You could have an unlimited amount of investors for that 12 million, right? And what's unique about 504 is two things. Depending on what state you're working in, right? Blue sky, right? This is a federal law, and then the state laws are called blue sky laws, okay? The state by state is going to dictate, if you're doing a 504, the solicitation and the ability to either take accredited or non-accredited capital. Okay. So, and again, I'm making this up, but let's just say you go to Arizona, you check with the state administrator, you're doing an offering under 504, and under Arizona blue sky laws, they say that you can generally solicit and you can take accredited capital, a non-accredited capital, excuse me. Okay. Carly, you're mute if you're trying to say something.
Oh, can we define accredited and non-accredited real quick for everyone?
Perfect. So these are retail investors, both accredited and non-accredited, not considered institutional yet. And the quickest way to understand it, if you are accredited, you make as an individual 200 grand for the past 2 years with anticipation of making it on the third. As a single individual, as a married couple, it's got to be 300 grand with the same timeline apply, right, for the past 2 years with an eye on making that same amount on the third. Or you could have a net worth of $1 million importantly, outside of your primary residence, right? So if you have a $10 million home and that's your entire net worth and you don't hit the income thresholds, you wouldn't be considered accredited, right? So they want to see that you have that liquidity, right, outside of your primary home to absorb any type of risk, right, for that net worth qualification. So if you meet those thresholds, you are considered accredited. Additionally, if you hold certain security licenses, right, the Series 65, the Series 7, and the Series 82, by default, you're considered accredited whether or not you meet the income or net worth thresholds. Also, there's certain little nuances. If you work for a private fund and you can demonstrate that you are a knowledgeable employee, sometimes they'll grant you accredited status to invest in that own fund. And additionally, any entity that has a net worth for more than $5 million, but that entity wasn't formed for the purpose of being accredited, right? So if we just put a bunch of money into an entity to say, hey, let's get to that $5 million marker so we can go invest in a deal that only accepts accredited capital, that wouldn't be appropriate. But if you hypothetically owned a business that was doing alternative investing that was worth 10 million and the business wasn't formed for the purpose of investing, you'd be considered accredited as well. So the most applicable ones are the income and the net worth thresholds. If you don't meet those thresholds, you're considered non-accredited. Okay. So for the purpose of 504, depending on the state, you can take accredited and non-accredited capital. Okay. And why, in my opinion, why you don't see a lot of operators doing a Reg D 504 is because it gets very clunky. Because you have to check in with each state administrator whether or not you can solicit or whether or not you could take accredited capital. Right? Even though it has those capabilities, which to some operators is easier, right? The ability to solicit and pool non-accredited capital, right? Because it's a larger pool of investors. You have to go state by state. So it gets clunky. Okay.
I used the 504 years and years ago, and that was because all of my projects were in Idaho. All of my investor base was Idaho, and Idaho's laws were friendly enough to the opportunity that I needed to work with. And so that was I've only used it once because there was nothing crossing state lines
Right.
in terms of the commerce or the investment side. And it was really cheap to put together, which is nice as well. But it has its place when you're super concentrated in investor base and everything is basically at home.
Exactly. Cool. All right, so that's one of the Reg Ds. Another Reg D, which now we're getting to probably the two you guys have heard of, 506B and 506C. Okay, these are the most commonly used. So under a B, okay, you can have up to 35 non-accredited investors, right? So that means the people who don't meet, who don't qualify, right? The examples I just explained. Okay, so you could put up to 35 of those people in a 506B opportunity. But the trade-off is you cannot advertise. You cannot solicit, do anything. So no Facebook posts, no large investor meetings, nothing. It is simply targeted outreach to people you have a pre-existing relationship. And this goes for the accredited people as well, right? You don't get to just say, all right, for the 35, I'm just going to do this type of outreach. And then once I hit my 35 threshold, I'm going to solicit and put it on a billboard. You don't get to do that. And they also define pre-existing relationships pretty vaguely in my eyes. They say you have to, it's like 30 days. And again, to Russell's point, which a joke he made earlier, is a lot of this stuff is gray and vague, which is interesting. And I've called the SEC, I've called FINRA to get clarifications, and they don't know. They don't seem to care either.
You'll find out in court.
You'll find out in court.
So
exactly.
we say just don't skate close to the edge. Let Black Rock and all those other people go play and on the boundaries, and we'll play in the middle.
Exactly. So B, zero solicitation, but I could take 35 people who do not qualify. Okay. Additionally, this is important. The accredited investors, right? Because I have an unlimited amount of investors, unless I'm doing a private fund, and then we can get into a whole other element, but I'll save that for another day. The accredited investors can do something what's called self-verification. So if you self-verify, I am accredited, it's simple as clicking a button. Now, for the eyes of this 506B, you are accredited. Okay? They allow self-verification. Okay?
Oh.
Yeah.
Okay.
Interesting, right?
Period. End of sentence.
Got nothing more on that. So any questions on 506B? Oh, go ahead, Russell. Sorry.
Yeah. So from a regulation standpoint, if you are looking for, if you have a 506B offering or exemption claim to your investment, you basically, if somebody says, yes, I'm accredited, you're off the hook, is what that means, that they can self-verify. You don't have to you don't have to put any more work into them checking the box on their, what we call subscription docs, and that's it. You are protected. If they're lying, that's on them, not on you. Unlike some other exemptions where you have to carry more responsibility, this one you don't.
Correct. As the operator, as a general partner. Exactly. Okay. So if you guys start to notice, there's trade-offs here, right? You could take accredited, which is a non-accredited, which is a larger investor pool, but they handcuff you on the ability to advertise your opportunity, right? So they're trying to make it fair to a degree. I guess their version of fair, right? Now, what's up?
The SEC, one good thing to remember is their job is to protect the voter. We say that the government is always going to protect the voter.
Yep.
And so basically the trade-off is almost always how you solicit and then how many rules you have, right? If they say, oh, you're not allowed to solicit openly, you can have some freedom. Or if you say, I want to solicit openly, they say, fine, but we're going to handcuff you a little more on the rules. And because they're trying to protect the voter.
And the voter being the LP, correct? Or the person
a
putting the
person.
money into the deal.
The retail customer, grandma, if you will, not the institution. They don't care about institutions. Grandma, they care about grandma, right? The voter. Was grandma solicited and got into this project because that's who they care about. The retail client, the voter, the civilian, if you will, right? Okay, perfect. So now we move into Reg D 506C, which I'm sure also a lot of you have heard of, okay? And 506C is very similar except with two key differences, really, right? you can generally advertise. So you could Facebook ads, billboards, whatever you deem advertising, right? You could put it out there. Hey, we're doing this opportunity. This is the IRR. This is the lockup period. Have at it. You can advertise. So huge plus there. Huge plus. Okay. However, you can only take accredited investors. There's no room for non-accredited investors. And the important element here is that you have to make sure they are accredited as the general partner. You have to do something that's called AML and KYC, and the verification lies on you. You cannot pivot that liability or responsibility. So you could generally advertise to everybody. So let me give you an example. We advertise our fund, we advertise our product, we have safe harbor under a 506C, and Carly and Darren are both interested. And I'm talking to them as the GP, or another GP is talking to them, and they want to move forward. And we say, great, right? And we move towards getting subscription docs together. And it turns out, as we're processing Carly, she qualifies. She meets all the thresholds, right? We either got a letter from her CPA, or she verified her tax statements and all the necessary income requirements, and we verified, okay, Carly is accredited. For whatever reason, even though this is not true, Darren is not. Now, are we going to get in trouble for advertising or talking to Darren? No. But at that point, we have to say, Darren, you didn't meet the qualification. We can't take you on this opportunity. Can't. Sorry, brother. That's it. You're out. You're out. We would jeopardize the whole offering if we took you. Okay? So
And
that's
so-
why. Go ahead.
Yeah. So if you were, example, pitching your 506C offering on a stage to a group and you don't know who's in there or who's not, you're still allowed to pitch to everybody. You just have to say in your disclaimer in the beginning that this is for accredited investors only.
Right.
And then you're good, right? Because that's the only people you can solicit to for the sale of the security. And you just have to say that all the time. This is for accredited investors only. And you're good to go. And then the difference between the B is they don't get to just tell you they're accredited anymore. They have to prove it. And you can do that through third parties you can take their verification. So you don't have to look at all of everybody's tax returns or balance sheets, or their accountant or attorney can write a letter and you can accept that.
So that effectively encompasses the Regulation D exemption. I should also mention that the equivalent of the prospectus, right? You invest in Apple, you're getting a prospectus. The prospectus equivalent is what's called a private placement memorandum. Okay, so that's detailing everything, right? In addition to the subscription docs, basically they're going to say, here's all the ways this thing can go wrong, right? Full disclosure. So any investors who are looking at a Reg D and, absent of fraud on the general partner's part, they're fully aware of what they're getting into. That principal is not guaranteed. Okay, and that's covered in all of the documentation, right? Full disclosure always with a Reg D if done the right way. Additionally, you need to file what's called a Form D, okay, within 15 days of the first sold security. Okay, and a Form D, even though this is an exempt offering, right? You're not registering with the SEC, you're registering exempt, okay? You're effectively letting the SEC know you're there. It's a notice file. And upon the first sale of that security, you got to file Form D and let them know you're there. Okay. And this gets, Carl, you mentioned this in our text, this gets uploaded to Edgar, which is the electronic data gathering, help me, Russell, analysis system for the SEC. Oh, it's got it. It's their filing system, right? So when that Form D goes into Edgar, you're going to be able to publicly see that Carly did the private offering. And she filed a Reg D 506C, and she used a bank and a placement agent, or she didn't, or she raised this amount of capital, right? So it's kind of cool because that's building Carly's track record now, right? She's ever going to position herself to talk to institutional grade capital. They're going to say, okay, they're going to go right on Edgar, pull Form D, and see that Carly's building her track record and her experience. Okay, so that's Regulation D. That's one exemption. Everybody good?
Oh, are we still in 506C? What was that?
We just ended 506C.
Okay.
The Form D is applicable to all Reg D. 504, 506, 506. Yeah. Okay. Perfect. Okay. What else we got? We have, moving on, let's do Regulation A. Okay. This is an interesting one. Okay, Regulation A is also, it's actually a mini public offering. Okay, so it's not full SEC registration. Okay, so they're exempt from full registration. So it's like a mini IPO, basically. Okay, and there's two ways, well, one main rule of a Regulation A. You can raise up to 75, an aggregate of 75 million per year under Regulation A. Okay. There's one tier, which you can go do 20 million. Tier 1 Regulation A is 20 million, and Tier 2 is up to 75 million. Okay. You do have to qualification under the SEC, right? Because it's a mini public offering. Okay. The Tier 1 opportunity is subject to blue sky state reviews. Okay. But the Tier 2, the larger one, is preempted by federal law. Okay. If you go the larger one, here's now the trade-off. And Russell, you could hop in on this too. For Reg A, the trade-off is the reporting. Annual, semi-annual reporting, financial reporting, documentation to the SEC. There's ongoing reporting qualifications that have to happen. That is the trade-off, which allows a Regulation A to be available to both accredited and non-accredited investors, right? So it's a mini IPO. Now, why in my opinion, a lot of private market operators don't pick a Reg A is because it's expensive. Okay.
And
that's my, go ahead, sorry, Russell.
yeah, and I'll add to, well, a Reg A is not super common. I've never done one. I know one person who has. He did not like doing it at all. A lot of like influencer funds. So don't quote me on this, but I believe a handful of Grant Cardone's fund stuff is Reg A, because you have the least amount of rules in terms of how you solicit and who you take money from, but you have a pile of rules of what you have to turn over to the SEC, having audited financials, et cetera, et cetera, et cetera. Yeah, you like have way more rules on the back end and they let you free on the front end, right? So it's not super common, very expensive to put together and regulate, so you see like influencer folks, people that have huge followings and do things all on social media. That's how the only way they can get protected, and where a lot of their followers may not be accredited, they need money from all of them, right?
Interesting.
One thing I will add real quick, seeing some of the comments in the chat, you don't need to know 90% of any of the things we're talking about right now. The main thing you need to know is it matters, and then to practice the discipline of respecting how much it matters. Those are like your responsibility more than knowing it, because there's nerds like us that know it, and this is what we do day in and day out from an advisory standpoint. And then there's attorneys that actually write up the paperwork and make it come to market. And so you don't have to know 90% of it. You just need to know it matters. And then more than even knowing that it matters is practicing the discipline of respecting that it matters. And that's mostly the hard part, is to do it the right way, because sometimes it's the harder way.
Especially in the beginning.
I want to kind of reiterate what Ryan was saying earlier. He's like, first identify if it's a security, and then Russell and you guys were saying, then go to the SEC attorney. They know the ins and outs. You do not have to memorize the ins and outs. I love that, Russell. If you guys take one thing from this, it's know that there are rules and have a massive respect for those rules. You don't have to know the code in and out. Good call out.
Yeah, exactly. Yeah. Exactly. So that's Regulation A in a nutshell. And again, trade-off is heavy audits, heavy ongoing reporting, expensive upfront, but you get a little bit more flexibility on the investor side, right? There's always a trade-off, always a trade-off. So that's Reg A. Not a lot of people use that. Okay, then let's see what else we got. We have rule. Here's another one. Sorry,
to answer the question, what reg is most common in real estate? It's probably Reg D 506
for sure,
B or C, but that's the most common everywhere all the time.
Yep. Cool. Then there's something called, actually, do we have any open questions in the chat that we should jump on real quick?
Amber said, can you recap how a security can be one person? Oh, that's during Q&A. Anything that we're going through right now that you guys have questions on? Just put it in the chat though.
Okay, cool.
Jonathan, is your hand up for what we've been talking about now, or Alan? It is? Okay. We'll bring you up.
Cool.
All right. Jonathan, you're up.
Okay, first of all, long time no see. How are you?
Good to see you.
Yes, likewise, likewise. Okay, so Jonathan Mosier, sub two, Pace Morby. Question. So you had mentioned earlier about pulling equity and doing all this. Can we use equity in a situation like this to do like reimburse uh, investors in an initial what is it called? Like a pool of investors and their initial dividends. And if so, would that be considered a security? How would that work?
So you're asking, so if I'm understanding, you're saying a project already exists and there's some type of investors on this, on project one, right? Then you're
Not
saying,
there's not a project yet, but I'm just trying. We have a project in mind that has equity in it, and we're wanting to take equity out at closing to help cover the initial dividends for the first. I think it's 90 days we had agreed upon.
um, okay, so you're looking at a project, it has substantial equity in it, right?
Yes,
Okay. You're looking to effectively refinance or leverage that equity upon
that
closing?
that is correct.
Okay, for the purpose of,
Covering the initial set of dividends as well as any construction cost, stuff like that that needs to be covered. Because I think there's like some repairs and some other stuff that needs to be done to the Airbnb
dividends for who?
for the investors that are investing in the property.
Are they investors? Or are they, okay,
So I will say,
um,
I will say that, Jonathan, your question is, there's a couple of things happening here, right? That are probably semi-disassociated. So the strategy of pulling out equity on the project and you get in and you have positive equity and then you want to monetize or get cash for that equity is kind of a question outside of whether it's a security or not. That's more of like managing your balance sheet and the financial aspect of your project. Whereas what you do on how you monetize that equity, that's what matters in terms of a security. So if you just go to a bank and they give you a loan and you can pull the money out that way, that's not a security, right? If you need to go to PMLs or and start shopping the deal around basically with the terms that you already have dictated, that's most likely a security. Whether you're using it to pull out equity or not is kind of on a front end question that is just a strategic type management decision. But
Okay.
anytime the money coming into the project that's changing hands, that's where the security lies. It's kind of on the back end. What you do with it doesn't define the security. It's how you get it that defines whether it's a security or not.
the initial offering, right?
Okay, so the initial offering is coming from like an investment type club.
Okay, we're going down.
We're going down. Okay,
Okay,
we are not there yet.
that's what I was afraid of. So
Okay, I think if you guys have questions about what they're talking about right now, drop them in the chat. I'm not going to do hand raises quite yet. And then I want to do the Q&As like this at the end, if that's okay.
Okay, that's
But we
fine.
will get there.
Okay, no problem. And y'all may cover it, and I may not have the question at the end. So
Perfect. All right.
Cool.
okay,
So let me
thank you.
knock out rule 147 real quick. Okay, it's 147 and 147A. Okay, so this is considered what's called an intrastate offering, which means one state. So it allows businesses, operators to raise capital solely within one state, as long as a significant amount of business is done in that state. And in order to qualify, I like to call it the par rule, 80% par. And what I mean by that is 80% of your proceeds 80% of your assets, and 80% of your revenue have to lie in that state. Okay, in order for you to be considered doing significant business in that state. Okay. Now, under Rule 147 flat, you must be incorporated in that state. They've since updated it and called it 147A, where the same rules apply, except the incorporation may be out of state, right? Because a lot of people are seeking Delaware or Wyoming LLCs. Okay. So if you adhere to those restrictions and you are doing significant business in one state and all your investors come from one state, you can advertise and take accredited and non-accredited investors as well. But it's centralized to one state. The second you go out of your state jurisdiction, the state line trap, boom, exemptions lost, over. Okay, so 147 is specific to one state where you're doing significant business. Okay, cool. Reg S. This is probably going to be less applicable to most of us at the moment. Reg S is what's considered offshore. Okay, so again, this is back to the safe harbor exemption. If you are raising funds overseas, right, not domestic here at the United States, you want to make sure that you're always in compliance with the SEC to make sure there's zero confusion. And you are going to file or seek safe harbor under Regulation S if you're doing an overseas project. Okay. And there's certain restrictions around that where no one who resides physically in the United States can participate, regardless of citizenship, and no direct selling efforts can be made in the United States. Okay. This is strictly offshore. You'll see a lot of times high-level operators combining a Regulation D and a Reg S to be able to both capture, United States dollars, as well as overseas dollars as well. Okay. So it's typically layered alongside a Regulation D. Okay. So that's Reg S when they want to go offshore or international, however you want to put it. And then I think the last exemption that is probably applicable to all of us as private market operators would be Regulation CF or crowdfunding. Okay. So Reg CF basically allows companies to raise money, okay, on an online platform from both accredited and non-accredited investors. Okay. There is a trade-off though. You can only raise $5 million over a 12-month period. Okay. And the offering has to be conducted through a FINRA, SEC portal or a broker-dealer. Right. So there's some websites you'll see out there. I think WeFunder is one of them. Right. These are either portals that are backed by broker dealers or a FINRA member portal. Okay. And everything has to flow through there. So if I'm promoting my Reg CF offering, I could do like a Zoom, but I can't really talk about the terms to my investors. Right. I could say, I'm so great. This is my vision. My partner's Darren. My partner's Carly. This is what we want to do. The second someone says, hey, Ryan, what are the returns? You got to say, you got to go onto into the portal. All information's there. Okay. But that is all. So that's kind of the trade-off there. It gets a little clunky that all real valuable material information has to flow through the portal. Okay. So it's also kind of like a mini IPO, right? And you'll see a lot of, I guess, startups utilizing a Reg S. I'm sorry, a Reg CF, excuse me. Right? So it's just people can go in, they can say, okay, this guy's doing this guy's doing that, and someone can invest $2,000. They're looking to raise $5 million. Someone can invest $500. Okay. But the important part is it runs through a FINRA member portal or a broker dealer. And all the material communication has to happen through that platform. So that's the trade-off, right? You could take accredited, non-accredited, but that is the trade-off right there in regards to disclosures. You also have to disclose a significant amount of documentation into that portal, right? Projections, all that other financial stuff that kind of creates more transparency, right? You'll see a lot of times when non-accredited investors are involved, there's a lot more things on the transparency side, right? Reg A, financials, you got to be able to see all these things, right? Reg D, there's less transparency in certain instances. So they don't, they require stronger restrictions on who could actually invest. So that's the way I kind of perceive the trade-off is the transparency of the investment, what has to happen if you're looking to pull non-accredited capital. There's also Rule 144A, but that wouldn't be probably applicable to us. And then Rule 144, which you could probably touch on another time, that would have nominal
Yeah,
application.
skip those ones.
That's it. So those are the main exemptions that are alternatives to full registration with the SEC. So if you are in fact dealing with a security, you got your deal, you're excited, you're ready to go, you do your little Howey test, you go to your attorney, you're excited about the opportunity, and he says, no, yeah, you got to find an exemption here. Those are probably your choices. Cool. Any questions on the exemptions?
You did a good job. No questions.
I'll just reiterate real quick of like the first time I did a 504, I didn't even know what that was. I didn't even know that's what I was doing, right?
Mhm.
Just the folks that did know that I said, I have this project, I need money for it. How do I do this without getting in trouble? They did all of that for me. I had no idea. And it was years after doing it that I actually started to know what I had done. But it was done correctly just because of the folks that I used to get it off the ground. And so it just goes back to you don't need to be an expert in any of this to do it. You just need to know it matters.
Yep. And we work with a lot of clients in that capacity, even before they get to legal, right? As we're licensed to advise on these things. We're licensed to raise capital on these things, right? So Carly could come to us with a opportunity, and we help her put together a 506C, and I can go out there and hit the streets with Carly, take my little commission and be on my merry way, and Carly has full equity. It's still Carly's project, right?
That
Because we
seems
are
like a
affiliated
good
with
idea.
What's that?
So you help. So what you're doing is you're like, here, let me advise on you. This is how you do it. Also,
Correct.
not only am I going to advise on it, I'm going to help you raise capital. And because you are licensed in the capacity that you are, you can take a commission.
I can take a commission and be on my merry way. Yes.
Can we just mention about, maybe you have this later, about how people who aren't licensed and taking a commission for raising capital for other people? Is that something how you probably,
I mean,
do you have that teed up somewhere?
I have it always teed up
Can
in
we
my
just
brain.
talk about, you can collect a commission, but I probably can't go collect a commission.
That is
that correct?
100% accurate. You should never be doing what's called unregistered broker activity, because that is not a slap on the wrist. That you're getting now into federal jurisdiction. And all of these workarounds, the regulators will see right through that, right? Oh, we JV'd after the fact, or no, I sweep the property once a week. No, I stayed in the deal. Absolutely not. You are now an unregistered broker, especially if it's an equity opportunity, right? Now, if you're brokering debt, there still are a lot of restrictions, right? Still, state-specific restrictions, right? But you're brokering debt. So Everbridge brokers debt. We have our own loan brokerage as well, right? We have an equity brokerage and a securities brokerage, and we also have a debt brokerage, right? Where Judah, who a lot of you know, will either broker SBA loans, or he could broker our proprietary bridge loan. But it's not, Judah's working that file, and Darren as well. They are really working this file. They're working as the broker to put a lender-ready file on a lender's desk. And we adhere to any and all state restrictions and all commercial lending rules. It's very, very nuanced and specific, right? So you're either brokering debt or you're brokering equity, and both are regulated. The connector thing, you're going to get yourself in a lot of hot water. I see a lot of people posting like, so-and-so brought me into the deal, and then the deal goes south, and they go reach it back out to me and say, oh, I was just raising money. It's like, you are treading on some really thin ice there. So I wouldn't recommend it. Now, there are things like referrals, which are applicable, right? But like a referral is Carly, meet Darren. Darren's looking for this, you're looking for that. I probably wouldn't even take a fade. Maybe buy me a beer if things go well. That's it, right? Like, that's it. But like, you have people out here charging. The craziest part is it's success-based, a percentage off success. That's where you really need the licensing, right?
The key.
So
based off of success of somebody else's activities.
There you go. You see how it all ties in?
Frame that.
See how it all ties in? Exactly. Exactly. You should frame that,
Yeah.
right? So yeah, no, connector, it's either you're either doing referrals, right? Where it's meet so and so. I have no dog in this fight. I thought you guys might connect. Maybe buy me a beer if things goes well. Do your own due diligence, right? You're brokering loans or you're brokering equity. Brokering loans, it's regulated, very, very regulated, and that's work. Broking equity is even more regulated, and you can't do it without a license at all.
And that's why Ryan has a license and can legally
Correct.
help you guys with this and help you raise equity.
Correct.
So if you want to go down Ryan's path, you can do that. Just, you just have to do some licensure stuff.
Yeah. Well, yeah, you got to take a bunch of tests. You have to affiliate with a broker dealer as well.
Mhm.
It's not just as simple as I'm going to pass it. You need sponsorship for the final exam. Yeah, you can't. So you can't just do it, right? And let's just say, Carly, you did have an opportunity and Everbridge came. Now, I should also mention that Russell is licensed as an investment banker. So that's where the advisory element comes in. And Darren has also passed the initial SIE exam and pursuing licensure as an investment banker.
Nice.
So Everbridge can effectively take you from A to Z if you want to do a private opportunity where you come in with us with an idea and we help you put the private placement together, the thesis, right? That's a lot of people underestimate that as well. People just put it together via a lawyer and say, why didn't I raise any money? Well, because you didn't put any thought into this thesis. You didn't figure out what investor base you're targeting. You didn't, emphasize or curate all the necessary elements in the deck or the pitch that investors want to see or hear, right? So that's an underrated, outside of the quantitative, like we help really curate a thesis to put the operator in a position for success, right? We set them up all the way where they can hand the file off to legal and legal effectively just boom, now they're back on the other end. And then we engage on a engagement letter where I say, all right, let's hit the streets, Carly. Let me help you raise for this thing. Because we worked through it. We already know the investors we're looking for, right? So we advise on the front end and we could also help raise capital on the back end.
I'm a recovering lone wolf and like, F it, I'll just do it. I don't need anybody. I'll do it myself. And I have learned in this business, you cannot be a lone wolf in this business and be successful. I can be like, I have an opportunity, but I need guys like Everbridge to help me, give me the strategy and the look at it and help me raise capital and understand the human aspect of it. And, so
yeah,
don't try to do things alone, you guys. Coming from a recovering lone wolf. Trust
and
me.
that's another reason why Everbridge exists, right? Because partnerships, and I feel very fortunate. I call it luck, call it whatever, the universe. I have the best partners in the entire world, but it didn't start like that. I went through like 5 different partnerships that were just absolute freaking nightmares, right? So I get everybody's hesitation to finding partners. I get that, right? I get the lone wolf theory. I get that. Mm-hmm. That's also why Everbridge exists, because you can still maintain that lone wolf brand. We're a service provider, but we function like partners because of the licensing, because of the approach. Right. So you're still Carly and blah, blah, blah ventures, whatever it is. You still have that. You could still preserve that lone wolf mentality, but work as if we're partners in the same way. So another reason why people utilize us, because we function like partners.
Yes. Love it. Can you talk to us? Because I know a lot of people want to know about. Let's talk about investment clubs.
Sure.
If we can, and where they fall in this and some things to know about them.
Sure. In my opinion, an investment club can be a very valuable tool when used appropriately. Now, it's been around forever. It's nothing new, nothing groundbreaking, nothing new. How compliantly, my opinion on how you should utilize an investment club is, I'll give you an example. Carly, Darren, Russell, we're all entrepreneurs. We all kind of look for the same assets. We like to do things. We all like each other, right? We say, guys, you know what could be cool? Let's each throw in X amount of dollars. Let's form an LLC. We could all be members and we could all hunt down these type of opportunities together. Darren, you're the CIO. Carly, you're the asset manager. Ryan, Russell, you guys are this. Everybody puts in their 100 grand. We chop it up 25 a piece. And now we have our own little investment club. That's an investment club and that's valuable. And they're done all over the place, right? But The work is actually there, right? If Carly's the asset manager, Carly's the asset manager. If Darren's the CIO, Darren's the CIO. If Ryan's the this or Russell's the that, right? That's a club. We're all just members of an opportunity together.
We all have a
Right.
specific job in
Correct.
the club. I'm
And
the
the-
asset manager. Darren's everyone has duties and tasks.
And we got that for exchange of our allocation and equity. The duties and tasks are real. So, in my opinion, if you're ever just Russell.
Can I just add that you can't build a fake moat around an investment club by just saying everybody has tasks and everybody's a common controlling entity, unit holder. Like you have to prove in the business that is like they're working there all the time. And a lot of times where people will misuse a investment club is they'll form it to put money into another entity. And now the investment club has made an investment into something else that it does not run day to day. And they try to say that the day-to-day operations of the investment club is just to oversee very little and nothing. Right. And so that's, look, if you think you can get away with it, with investment clubs, you might. But when the SEC rips open your office door and looks, they're going to find how do they destroy your theory, not how do they honor your thoughts, right? They're going to use somebody's money. They're going to find out how do they incriminate you, not how do they not incriminate you. So if you're treading on thin ice or close to the edge, they're going to say you're already off it.
But I'll have to give her medical bills.
For sure.
Sorry,
Sorry, I think it's Russell. It's probably Russell. Additionally, if you're formulating an investment club for the purposes for utilizing it as an alternative, right? I don't want to file an exemption because I want non-accredited investors. I don't want to file an exemption because I want to save on legal fees. They will nail you for that, especially when non-accredited capital is involved. If you are forming a club for the purpose of pooling non-accredited capital and they are on paper active, but are truly passive, I'll leave it at that.
So if hypothetically I do that and I go to an investment club, I do all of that and I lose money. Let's say like Brandon Turner did it that way because Brandon Turner raised money. Let's say he did it through an investment club, lost a ton of money. What have I opened myself up to if I were to do the same way Brandon Turner did? So he did it the right way. He did his filings. Right. Likely no one can go after him. If they did it through an investment club where we all had jobs and we lost the money, there's no PPM, there's nothing. What are the implications for myself or Brandon Turner if we do it that way?
Large.
Yeah.
Can my borrowers sue me?
They're not even borrowers at that point. They're investors, right?
Yeah.
But they were solicited because here's another thing too. You cannot solicit an investment club. You cannot say, oh, we can do all the advertising and then we'll form it the last minute so we could have this is so easily. It's like my son would do something like that, like to fool me. Like I didn't do this, The regulators separate this stuff. Go ahead, Russell.
I will add that there's kind of a question mark to the answer of that question because nobody's been brave enough to go figure it out.
Right.
Like is what's happening in the marketplace right now. Everybody that's been in it for a long time is sitting on the edge like vultures, watching to see those who are brave enough to go try it and see what happens, right? Yeah. And so there's folks out there misusing investment clubs. Investment clubs are meant for friends to put together and form an entity to make investments, not for people soliciting investments to get money out of people. That's not why investment clubs exist. And so I'm not going to say no other, majority of investment club platforms, which have been around for decades, are not brave enough to do what other people in the marketplace are doing until the courts decide. Because we don't know what that looks like. We just know that it's going to be you versus the SEC in that scenario, and the courts will decide, and it will cost you millions of dollars to find out, even if you are right. Hopefully you got millions of dollars to find out whether you're right or wrong. And that's the hard part, is a lot of folks won't even be able to defend themselves to find out if they're right or wrong. right? And
And
so,
this is the operator, mind you, right? This is not the platform. I'm sure my
Yes.
estimation is any platform they're taken care of, right? They figured out a way. This is the operator who is now blindly believing things that they can do this because of X. They're the one in the hot seat, big time. The operator.
yeah, so it's to be determined. I'm not brave enough to be in that to be determined fishbowl at all, and neither are most of the people in the industry. So it's just sit on the side, and there's others who are willing to go take on that burden and risk, and we'll find out in a couple of years what the answer to that question is truly.
Yeah,
Can
and it comes. I was
can
gonna say, Carly, it comes down to the operator, right? It's the way I view it is like, why go that route where there's gray or potential large compliance implications when you could just start building your track record today the right way? Right? Because you eventually want to get to the point. I'm sure everyone here has larger aspirations of institutional grade capital investors. They want, maybe some don't, but some do. Why create any risk for yourselves? It's a little bit tougher up front, but man up, do it the right way. That way you're free.
Unfortunately, you can't afford to be wrong, but you also can't afford to be right in this scenario because it's too expensive to prove if you are.
Yeah.
So can let's say it's me who raised the capital and lost it through an investment club. Have I opened myself up to personal liability? So I lose 200 grand of people's money. Could I get a judgment hypothetically against me to pay that each person back?
You would put a lot of power in the investor's hands and the regulator's hands. And it could be, again, I'm not going to speak on any type of, implications, but with the civilians, if you did it if they had non-accredited people in there, you were putting a lot of power in the regulator's hands. And to Russell's point, you want to find out if they make an example out of you?
Fuck around, find out.
Yeah.
Yeah.
Excuse my French.
Most of the time, like the SEC's way of slapping a hand is you have to pay restitution, so whatever people lost, and then you are barred for 10 years from engaging in any
that's right.
type
You're
fundraising.
called a bad actor.
Yeah, you're considered a bad actor, and you go on a list, right? And so you don't. That's the slap on the hand. Is like, okay, you weren't a bad criminal. You just went out there, did whatever you wanted, but you weren't a bad human, right? So give back everything you lost, make everybody whole, go away, stop doing it, and now you're barred for 10 years from doing any capital raising securities type work. You can't even be part of a company that does it. You're a bad actor.
You're a bad actor. You 10 years to get that mark off. So yeah, it's
not worth it. That's the problem.
It's definitely not worth it, right? Just put in the extra effort. Get your stuff together, put the offering together, and go hit the pavement looking for. You want accredited investors in your offering. You want that institutional grade, right? Isn't that the trajectory we all want to go here? Like to constantly be scheming how to pull non-accredited capital. Why put the same effort into making the relationships on the accredited institutional side?
You're playing against the government that has an endless ATM to fight you, right? So you're always finding the loophole that they're always trying to close.
Yep.
And you pick an easier opponent.
Yeah, no kidding.
Exactly.
And going back to what Ryan said, when you do the filing or the exemption and it's in Edgar, you are building your track record. Who doesn't want a good track record? So, in 10 years from now, if Ryan's doing it or I'm doing it, people can go look my name up in Edgar and they can be like, Carly's been doing this for 10 years.
Really?
That is good for, you want a track record. You want to build credibility and trust. And by getting those filings each year, it's just compounding on the credibility and trust.
That's right. That's exactly right.
Yeah. So
I know the lane I want to be.
Yeah. Where are you going?
Any additional questions?
Should we do some hand raised questions? We're getting a little bit over, but this is really good information. And I want to get you guys, maybe we'll do these 3 questions, Alan, Jonathan, and Julie, and we'll call it a day. Thank you guys for being here so much. I know it's taken a minute. Yeah. Okay.
Carly, before I forget, I just wanted to give I told her I'd do this yesterday. I'll give a shout out to Gina Marciano. She came to me about a few months ago at this point, and she's like, I want to do this stuff and I want to do it the right way. So I've been helping her through. She's pursuing licensing and then potentially opening her own placement agency, whatever she wants to call it, but she wants to raise capital as an intermediary the right way. So I'm giving her a hand.
I love that. You guys, and if this is something you want to be capital raising for people like this, I'm sure Ryan will be happy in Everbridge to be like, let me show you the path. You know, it's not an easy path. You have to be sponsored, da 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 da. But this can be a total career choice on you guys raising capital the right way, getting in there, getting, just like Ryan says, let me help you put this all together. I'll help you raise capital. Give me a little cut because it's legal. And I'm on my way and on to the next one.
Yep.
Thank you. Thank you for calling her out.
Yeah, absolutely.
Love it. Okay. Anything else before I go to the questions? All right. Alan Knowles. I can't bring you up because you don't have your camera on, but you can talk.
Hey, Carly, how you doing?
Good to see you, hear you.
Yeah, this is great. Thank you and Russell and Ryan for a great presentation today. Very valuable information.
Good.
I'll be brief. Just to circle back a little bit, especially based on what you just finished talking about, and under the guise of the concept of slippery slope or too good to be true, could Ryan or Russell just go briefly back over the self-certification or self-accreditation business, because that does seem that form that they would fill out, is that really as foolproof as one would be led to believe, or could you just touch on that again?
Sure, absolutely. So you're referring to the 506B exemption, right?
Yes.
Where if you could take up to 35 non-accredited investors and you can't advertise. So yeah, in my experience, it's as simple as clicking a button, right? When you enter the portal, you enter the opportunity as the investor, you click, yes, I'm accredited, or no, I'm not accredited. And whatever you click, that liability and responsibility lies on the investor. The GP, the person who launched the fund, the opportunity or the offering, is effectively absolved from that liability. In my experience, it has been. That's, again, I'm with you, Alan. It seems a little counterintuitive. And Russell, maybe you could speak more, but I feel like you've had the same experience. It's as simple as a click.
Yeah, they literally just have to check a checkbox. But everything's a trade-off, right? The government says we don't have to care about that too much because you don't get to go solicit people you don't know. You only get to go to friends and family and known associates. So that's kind of why they're like, who cares? You have these other rules to protect folks.
Right.
Okay. Yeah. It just seemed curious because they're so, they double down and triple down and everything else, and then there's this that seems almost too easy or too
Well, again, the trade-off is the inability to generally solicit, right? So if somebody's looking at your opportunity, it means they've had if in a 506B, it means they've had a pre-existing relationship with you, right? They're friends and or family. So it's almost inconsequential to click because they've effectively, the trade-off is the handcuffing of being able to pull strangers, right? Grandma from around the block. So that's, I guess, if that helped, if that's helpful.
You usually only see friends and families and known business partners do 506Bs.
Right.
They got a new project. They've all done work together in the past, and they want the guy responsible to treat it as a security. So they have better protections as an LP and he has better protections as a GP. And so they just choose that way, but they never have to go find investors. Like that part's gone. They already just use it for that project that they want to do together.
Yep.
Would that make more sense then with regard to your recent discussion about investment clubs, to go that route? Would that be the better way to go?
I'm always going to recommend. Yeah.
Nobody forms an investment club as the sponsor. Like if you want to take money from people, there shouldn't even be in a conversation that you want to form an investment club. Investment clubs are formed by people with money that want to. It's a business. It's nothing more than an LLC where everybody's members. Investment club is just a nickname, really. And so it's like you should never be talking about I'm going to go form an investment club unless you're the one putting money into it to go make investments.
Right, right. And your brother's coming in with you, and so is your cousin, and you're all putting in the same amount. And you're actively pursuing investments.
Okay, that makes more sense. Right.
Yeah.
Thank you.
And heck, whoever gets nailed by the government, if they happen to win, then we'll find out that it is a good idea. But good luck to them.
That also reminded me, I have a question that that people can do it. I want to know your opinion on funds of funds. So let's say you guys are accredited or the general partner. You have someone that's got their stuff together. And what you can also do is a fund of a fund. So you're just like, you work with their SEC attorney and you just raise capital. You have to follow the rules of the accreditation and how you can solicit and stuff. But that's also another way is you can kind of hitch your horse to somebody who has been doing it for a while, learn from them. So that's also, we didn't talk about.
Yeah, that's a very valuable strategy, right? We've seen a lot of larger operators create, for lack of a better term, a master fund.
Yeah.
And then talk to 4 or 5 other additional capital raisers, operators, and say, hey, listen, you need to put together your own fund of funds offering, and your investment allocations is you're the general manager, and as you're out, you're going to make allocations into my fund. But they're 2 separate entities, right? A fund of funds is something separate from the master fund.
Yes.
A fund of funds is exactly that, a fund that's curated to invest in other funds. That's it.
Yeah.
So yeah, very, very became popular a few years ago. A lot of multifamily people were doing like the master fund and then having people do fund of funds. Not illegal. Valuable.
You're very much going through all the SEC attorneys. You're filing. You're doing that. You're doing you're
everything.
You're doing the whole thing. You're just not the GP.
Right. Let's just say we have a private equity fund. Everbridge launches a private equity fund. And Carly's like, oh man, I'd love to be involved. We're like, you know what, Carly, if you want to launch a fund of funds and your strategy in your fund of funds is to allocate into our private equity fund, but it's 2 separate, right? We're not helping you. Like, you're just launching your own fund of funds, and that's your thesis. You're going into Everbridge's fund.
Yeah. So I just wanted to note on that. Okay, Jonathan, we're back to you and your question. Let me bring you up. Oh, you unmuted.
Yeah, hi, how are you?
Good.
Okay, so you actually brought up a very scary flag for me earlier. So are you familiar with Lee Arnold and the Coco Capital system? No.
Is that children's cereal?
No, and that's what I was afraid of. Okay, so basically, I paid this X amount of money to join their program. Supposedly, I can broker loans through them and stuff like that, but I've never become a quote unquote licensed broker. So, yeah. Is that a problem?
What are you that you joined the community, like a loan broker community?
Well, no, it's not a community. Like my business card says broker, private money lender broker.
Yeah, I will say that's outside of security law for the most part. It's totally on state law. So you just got to Google whatever states you're working in and find out if you need a broker license or not. And
okay, so security broker is different from loan broker.
Big time. Big.
Okay.
Big time.
Scared me there for a second.
Back. Yes. Yeah. Loan brokering. Yes. State. Yeah, you're good.
Okay. Yeah, all right. Cool. All right. No problem.
Pretty much, I think almost all states require a license for mortgage brokers, right? But if you don't broker mortgages and you do different types of lending products, you just got to look up state law to find out.
I can do that. Thank you.
Yeah, absolutely. Quick question in the chat. Ginger said, how did Oren Claff raise so much with capital without a fund? I do know who Oren Claff is.
It's still a security offering. I know a guy that did a fund of funds in Oren Claff's, that company in Dallas.
Yeah.
And so he would do SPVs they still have to do a claim an exemption. Like even funds aren't the only ones allocated to exemptions. Anytime you're raising capital from somebody else, you need to know where your exemption is and why you don't have a register. So Apple stock, that's a security. They have all the rules that they have to follow as an IPO, right? But that's not a fund. And so he still has to follow all the same laws and everything else that everybody else does. It's just not under a fund structure. It's a corporate issuance of securities.
Right. He's issuing corporate stock of his own SPV. And then
there's a pile of fund of funds back behind that actually end up being the way that a lot of it gets funneled.
Yep. Cool.
Love it.
Julie,
you are unmuted.
Hey, Carly, how are you?
Good.
How are you? I was gonna say it was great to see you, but you can't see me. I'm sorry, I have to be off camera for a bit. Thank you, Ryan and Darren and Russell. Appreciate all the info. And my partner Lee is in here. Just a quick question for you on the fractional investment club. You kind of raised that, and we're a little bit concerned. I do see that somebody else had a question on it. I mean, I don't know if you can speak about that. I know you said from an operator standpoint, you don't think we're covered. From their standpoint, they are.
well, their standpoint has nothing to do with your standpoint.
Right.
Nothing. They're not your attorney. They're not going to have your back in court. In my opinion, if you're ever looking to raise capital from passive investors, seek an exemption. Do not utilize an investment club or an investment club platform to pool capital under the guise of, oh, no, they're active when they vote once a month, or maybe some months you don't even get a hold of these people. I would always be highly sensitive when you're pooling non-accredited people. You're forming a lot of people. I say, oh, I'm just going to do investment club so I can pull a non-accredited capital. No, not a good idea.
Right.
Investment clubs, as we said earlier, me, Darren, Carly, we know each other. All right, I got 100 grand. Carly's got 100. You're the asset manager. Darren's the CIO. Let's go buy some stuff, guys.
Sure.
If you're using it as an alternative to filing an exemption, I would recommend against that. Again, I don't want to be the guy that they hang against.
Again, we're not your guys' advisors. We're not
Absolutely.
legal.
No, I appreciate it.
Right.
I'll tell you what I would do or not do.
Yeah, like we can kind of give you our experience and our opinion on it, right? But it's ultimately up to you guys to make the decision in which you guys also want to go through, right? Like if you choose to go through fractional and you choose not to retain an attorney that's in the world of the SEC, and right, that's up to you guys to make that decision, right? But we can't tell you you can or cannot do that. We're just giving you the education of saying this is what an investment club is made for, right? It is made to pull capital between friends and family. Like you can go check this on the SEC website. This isn't something
advertise. You can never advertise.
Yeah, you can't generally advertise in that. Like it's literally made for Carly, Ryan, and Darren. Want to go pull capital together to do an investment and purely that, right?
We all have jobs. We all have legitimate jobs.
Yeah.
Okay.
So if you guys decide that you think you can do an investment club through fractional and all the 100 people, accredited or non-accredited, all have a job, that's up to you. Right?
Sure.
But we can't, I'm not going to sit here and tell you it's wrong or it's right. That's up to you guys to make decision. We're just going to give you the education of saying, this is what an investment club should be, right? But it's up to you to pull the trigger and say, I'm going to raise capital in this way, right?
Right. No, I appreciate that insight. And thank you, Gina, as well. She's the one that invited us to this. So Gina, big shout out. So we'll be reaching out to you, Ryan.
I think I just saw an email from Gina.
Thank you. Thank you, guys.
I would add, no matter how you're bringing in capital, name any structure or way, always have an attorney verify it before you pull the trigger.
Okay.
You can work with advisors that are generally a lot cheaper than attorneys up to that point, but right before things actually matter and consequences are real, you need to have an attorney look at it that would be willing to go defend it in court, to stand on his own opinion. And then you would have to pay for him to defend his own opinion that is, now yours. So that's, whether it's right or wrong, is only precedent on your ability to defend your decision, and your attorney's ability to defend it too. So that's a whole nother strategic, thing outside of even if it's right or wrong, is can you defend it?
Right. 100%. Thank you both. Thank you all. Appreciate it.
Yeah, absolutely.
Thank you, Julie. Great question. We'll have one more left. Carlos, how you doing?
Hi guys. Hi Carly.
Hi. Oh, you
What's-
got your. Let's get your. You got your camera on now. Let's get you up here.
Yeah, I
There
turned
you
it back
go.
on. First I want to say thank you to Darren, Ryan, Russell. I love Ryan's input whenever I see him in social media. So
Right.
I had to make sure I was in here so that I
You want to tell my wife that, Carlos? That'd be great.
Yeah, it's part of the game. Somebody would have to tell my wife something about me. But so I'm in a position where it's a civilian. They got injured at work, right? And they got a big lawsuit. And they know nothing about investing or anything because honestly, as Mexicans, that's not really how we were taught or raised. So he's like, hey, I see that you're kind of doing this real estate thing. I'm willing to give you like 200K. And I'm like, okay, that's horrifying. I don't know what to do with that. And so like, and I'm aware of that. And I'm not going to BS him and be like, yeah, let's buy a flip or because I don't want to do that. That's his money that I don't want to lose. But he was like, maybe we structure like an LLC or something, but you just go to work with it because like I don't want to deal with it. I just trust you. And I'm like, yeah, again, that's horrifying. Like you're just giving me a lot of money, and I don't know. And so I want to take it to where I can give it to a good operator or somebody like you guys, right? Somebody who knows what to do with monies and stuff like that. Because I'm like, that's a lot of money where I don't want to just lose it for you.
Sure.
But then it's like, okay, but he also is open to me getting a cut of it or getting paid. So I don't know how that works because I don't want to like broker the money out or something. If that's, I don't know how that works, right? Again, I'm also new to it.
And that's not a bad situation, Carlos, at all. It's one that would warrant a much longer conversation
For sure.
Yeah.
on it, but I would leave it with if 200 grand is all he has,
He got a lot more.
Okay.
But that's how much he's willing to just like, he was like, yeah, I can just like wire it. And I'm like, I don't even know if that's how it works.
And
Like, I don't know if we need to put it into a separate bank account first or
like, you definitely want to lay the groundwork before anything happens where it's solid. And there's ways to do that in the scenario, but it's not your job to manage his portfolio either. But as investors, from his view, the only thing you can control is how much you risk of losing. That's it. You can never guarantee outcomes. You can never know what's going to happen. The only thing you can guarantee is how much you might lose. And even that's a sketchy guarantee if there's other lawsuits.
Realistically, he could lose all of it, right? So,
well, if you're investing in alternative assets, right, just for informational purposes, alternative assets by nature, real estate, private equity, private credit, they are considered more risky due to the lack of transparency, right? If you invest in Apple, you invest in Google, you could pull all the information you need from the formation of the company. It's all available to you, right? 10Qs, 10Ks, 8Ks, right? All the necessary documentation. So that's why public stock is open to anybody because of the information that's on hand. So due to the lack of transparency and alternatives, it's deemed more risky, right? So what I can say, Carlos, is your intuition is absolutely correct. That's scary. It's a lot of money. It's not necessarily a bad situation to be in.
No,
But you want to make sure that you are not acting as a fiduciary, unlicensed, right? As an advisor, you're not acting as a broker, unlicensed. We'd be happy to have a larger conversation with you just to say how you might want to proceed or not proceed. More than happy to do that with you. But your intuition is absolutely right. It's where it should be.
I want to do things right, and I don't, I want to respect that and everybody involved. So I want to do it right, and I don't want to like lose it and then get sued on the back end and not know I was supposed to put some kind of securities in place or something.
Yeah, absolutely. Yeah, feel free. Like I said, I'll put my contact in the chat if you want to text me, or we could hop on a quick call and just be more than happy to walk it through. Yeah, it's more than a 5-minute question.
For sure. I just wanted to drop it in there and be like, where does this fall in any of this?
Yeah, absolutely.
But I appreciate it, guys. Thank you.
Yeah, Good work on the intuition. You're accurate. 100% where it should be. Most people don't even get that far. Most people are like, I'll just spend it. I'll get into this, right?
Yeah. And he was like, I'll just wire it to you. And I'm like, don't do that yet. I'm like, I need to actually look into this. If you wire it to me, guess what? It's my bills are gonna start getting paid with it. It's like, yeah. So yeah. So
Carlos, the number one key to all this is be honest, and it sounds like you're doing that.
Yes.
If your bills are getting paid with it,
I'm very
you got
honest.
step number
Yes.
one.
Yep.
Great
I've
question. Thank
I've
you,
learned to
Carlos.
keep my closet empty, you know?
Yes.
It's very, very good to just take things on as they are, and if they don't work out, they don't work out. Keep going.
Well, thank you, Carlos. That was a great question. I think we're going to wrap it up. We have spent so much time here. Thank you guys. If you guys don't mind just making a post on social, thanking Everbridge, Ryan and Darren, and putting but most importantly, taking your best takeaway from this. What is your one takeaway? Because it really is spreading this knowledge. How many of you guys like put a 1 in the chat or put a me in the chat? How much did you guys learn? Did you guys going into this be like, holy smokes, I didn't realize you don't know what you don't know. Nancy's like, one. So pass this knowledge on. I'll put a replay. I'll give it to Everbridge if they want to put it on anything for a replay. But this is good knowledge. Share this knowledge with people. We want this knowledge to get out. It's just, and like Russell said, you don't have to know the ins and outs of like Reg D 506BC3AB Form D. There's a lot of words and there's a lot of things. The biggest takeaway, you just need to know that there's rules and you need to respect those rules and do not be a lone wolf. Get with people, get with an SEC attorney, get with people like Ryan and Darren and Everbridge who are licensed in this. So there's a lot of information out there. People don't really understand it all. And that was our goal, is to get all the information out there. So you guys also said that you guys had a Howey Test website.
We do.
Do you want to share that website? Yeah. I think it's a test. It's a website that's like, that goes over what we first started. And I'll put the website in the email follow-up. Everyone will get a replay. I'll put the website. I'll put Everbridge's contact information, all of that. But the Howey Test, for those of you guys that join late, is how you can decide if you have a security on your hands. So use that. Go back and reference that over and over again. Share that. It's a good knowledge for everybody to have to understand what the Howey Test is. So all of you at Everbridge, Darren, Ryan, Russell, thank you so much. So grateful for you guys taking your time and sharing your knowledge. We very much appreciate it. Thank you.
Thank you, Carly.
So
thank everyone for being here. Thank you guys.
Yeah.
Thank you all for being here. All right, everyone. Have a wonderful day. Go follow Ryan, Darren, Russell. You guys, can you put your contact? How can people get a hold of you? Where do you want people to get a hold of you? Can you say it so people can see it on the replay and also put it in the chat? Like you can see on their things so they have.
Sure. My phone number in the chat, and then Ryan, Darren, Russell at everbridgegroup.com.
Yeah.
So,
yes. And
Darren
everbridgegroup.com is their website.
Yeah. So you're watching replay. This is all of our contact info. You can follow it there. Phone numbers, our own cells and stuff, they come directly to us and so forth. So Instagram handles, etc. All good. And then I threw my Blink card in there, so you guys are welcome to click that, send me your card. You know, we'll stay connected and so forth. So
yes. Please utilize these guys. They have knowledge. Like I said, I have knowledge in this, but I don't have knowledge like these guys have knowledge in here. So these guys utilize their knowledge, work with them. And I know at least you guys are going to be coming up and helping with zero down stuff too, for the zero down business stuff. So you guys are in zero down, they're going to be helping with their knowledge in there as well. So, and then if you're in Gator, I think Gator, we have underwriting Zooms, sub 2. I think you guys, they're on a lot of the communities. So they're sharing their knowledge everywhere. That's where you can find them too. So, all right, everyone. Thank you. I appreciate your time. Thank you all for being here. Thank you, Everbridge. You
Thank
guys
you,
are the
guys.
best. Have a good day.
Thanks. Bye,
All right.
everyone.
Bye.